Welcome to the tutorial on company, the introduction and issue of shares. Generally, there are several types of business organization. We can see sole proprietorship business, partnership business, company. In a sole proprietorship business, there is only one person who owns the business, and the single person manage and control the business. On the other hand, in the partnership business, there are two or more people who combine their resources to form a business, and they are interested to share the risk, profit and losses of the business. What is company? A company is a business organization that is legally recognized as a separate entity from its owners. That means a company has a separate legal entity from its owner, and the ownership of the company is represented by share or stock. Generally, the individuals who purchase the shares are known as shareholders. The company raised the capital by issuing the shares. Initially, the company issued the initial public offerings to the public, and shareholders can transfer their share through the stock exchanges, and the liability of the shareholders is limited to the amount they have invested in the company. And generally, since the company has a legally separate entity, that's why it has a perpetual existence. Although the owners of the company is known as shareholders, but the company is managed by the board of directors, and the board of directors are elected by the shareholders in the annual general meeting. The special feature in company is that it can raise capital by issuing share, and in this chapter our main focus is on issuing share. There are two types of company. One is public limited company, another one is private limited company. In a private limited company, the minimum number of members should be 2 and the maximum could be 200. But in case of public limited company, the minimum number of members should be 7 and the maximum is unlimited. That means the public limited company can issue the shares to unlimited people based on the authorized capital. That means the public limited company can invite the public for purchasing share through the use of prospectus. Prospectus is a document by which the public limited company discloses the previous history as well as the intention to issue the share for doing any mega project by utilizing the collected capital from the issuing share. However, this chapter is going to focus on the issue of share to the public by the public limited company. As already said, the company issue share. That means the sources of capital of a company is shares. Generally, the private limited company can issue share informally. That means the private limited company cannot issue share to the public. Normally, the directors of a private limited company contact to the institutional investors to sell their share. but it is informal contact. That means the private limited company cannot issue prospectus and cannot issue share to the public. On the other hand, public limited company invite the public to issue the shares. For the purpose of issuing shares, the company issue a prospectus, and it also take help from the underwriters to sell the shares to the public. What is share? A share is a unit of the total capital of a company. That means a share represents a unit into which the capital of a company is divided. As for example, suppose a company has a total capital of 6 lakh, and if the company divides the total capital into 60,000 units of taka 10 each, then each unit of 10 will be considered as a share. That means each share has a unique number, and the share is a movable property. That means the share can be transferred from one person to another by using the stock exchange. Generally, in the initial stage, there may be a certificate of share issued by the company to the shareholders. But nowadays, most of the cases, the system is controlled by the central depository system, where certificate is not the main issue because all the information are maintained electronic or digital system. Generally, there are two types of share. The first one is equity share and another one is preference share. What is equity share? As a shareholder, if you have a equity share, you have the voting rights. That means you can attend the annual general meeting and you can apply your voting rights for appointing directors or for appointing the auditor of the company. Generally, if you have a equity share, you are entitled to receive profit in the form of dividend. But there is a little risk if you have a equity share. If the company don't earn any profit, then as a equity shareholder, you will not get dividend because the company doesn't have profit in the particular year. Another risk is, as a equity shareholder, you will not get back your capital before the liquidation. There may be some instances where the company can buy back the equity share where you can get back your capital. Otherwise, since the public limited company has a perpetual existence, you cannot get back your capital from the company. But if you think that you will not hold the equity share, then you can sell your share in the stock exchange because the share is a transferable securities which can be sold to any other investors by utilizing the system of stock exchange. On the other hand, the preference share is also the part of capital, but the shareholder of preference share has the preferential right in the perspective of dividend because the amount of dividend is fixed or the fixed rate of dividend is applicable for the holder of a preference share. And at the time of repayment, whenever there is a liquidation, the preference shareholder will get preference in the repayment. But the preference shareholder will not be able to attend the annual general meeting for voting purpose. That means the preference shareholder cannot apply their voting rights, and the preference shareholder can get fixed rate of dividend whatever be the situation of the company. Is there any difference between stock and share? Generally, sometimes we cannot differentiate between the stock and share because stock is the representation of total collective shares of a company. That means stock is a broader term that represents all the shares of a company. Each unit of capital is known as share. On the other hand, the total capital is represented by stock. That means 1 unit of capital is known as share and the total capital is known as stock. Thank you. This is the first part of this tutorial. In the second tutorial, we are going to learn about the subdivision or subcategory or types of capital and how can we show all those types of capital in the statement of financial position or balance sheet. Thank you.